Stock Trader Network, pre-market prep, coming back for some midday programming. Options Unchained with CC Lagator. CC, how you doing today? How's your week going?
I'm good. I'm good. How you doing?
I'm excited.
Yeah.
You were getting me ready for the show, and I'm like excited to do some learning and some talking about options today.
Yeah. Yeah. Well, let's start with today, and then we can kind of get into like where we are, sort of big picture into NVIDIA earnings and everything. So today is kind of interesting because we can start with a little bit of a conspiracy theory of
Uh-oh.
what just happened over the last hour and a half
Uh-oh.
or couple of hours. But yeah, if you go to my chart, basically what happened today is we looked like we were just going to go straight higher, which is kind of uncommon after the sort of volatility that we've seen, but it's not completely it happens sometimes. I think most traders are always sort of constantly looking for that big huge puke low intraday and a big red to green intraday reversal. Looked like we were kind of going to have one yesterday. The VIX got to 26. The market bounced. It almost got green, and then it kind of failed into the close. Those are the kinds of closes that generally follow through the next morning, and you get sort of a retest of that intraday low from yesterday. So today we decided, the market decided just to open higher and just keep ripping higher. And then right around when did we, top out? Like,
Like
an
10,
hour,
15, 10,
within an
20.
hour into
Yeah.
trading. Yeah.
Yep.
So we start to top down, and then you see those candles. It's like green, 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 red, 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 red. Right around here was pretty interesting because right at around 12:30 or so, news hit that the delayed jobs report is going to be delayed again. So we were expecting the jobs report tomorrow morning. And now that's going to get, I don't know, I didn't even read the article, but it's going to get rolled into, the next number or something, right? Which was originally the rumor anyway. So my point on this, there's a lot of conspiracy theories in trading in the market, but you can imagine how that statement is getting out to the press, and it's from the BLS, who's got a lot of people involved and everything. Clearly that news was out there earlier, right? And the reason I can kind of tell is the reaction that happened immediately after it actually hit the tape with Bloomberg, I think was the one to break it. That spike down that we saw during the day, and then the immediate buyers stepped in right at around 6,000 in the SPX we're looking at. It didn't even get to yesterday's lows. It just kind of hit 6,000. It was like whoever was selling here was buying back here because they knew that news story was coming out. Now, that's not, is that, I don't know. It's insider trading, but I'm sure that was out there. I'm sure I'm sure a few trading desks caught wind of that at around the same time is generally the way that works. But anyway, always like to start with something like that, just sort of interesting inside baseball type stuff.
Yeah, for sure. It was like, a little bit of an odd reaction, I think, in the delay, like because as far as I could tell, I saw this about 12:20, and we didn't sell off till more like 12:30 or something like that. So it was kind of interesting that it was delayed like that. I just want to note here that we will be getting jobs data for October. The as far as I heard today, the BLS thing was the October report, the October employment situation report, which was the thing that we had heard had been lost. And that
Yes.
was that report. So I think that
Yeah.
was already like kind of a flag for traders.
Yeah.
We still are getting JOLTS job data for that month of October, and it's from the BLS.
Yes.
So we are, just a little reassurance, we are going to be getting jobs data. I don't know why the market reacted that way. I think what you're saying makes a lot of sense because the reaction, I think, logically was a little perplexing.
Well, and you just added to sort of what happened there, but by the way, unintentionally, when you said that you saw the news 5 minutes before, the market actually did that
Yeah.
little puke.
Yeah.
That tends to be a sign that because trading desks are seeing that news immediately, and I'm arguing that they saw it ahead of time.
Sure.
That's the retail reaction. And, it takes like 5 minutes. I kind of remember last week, Google, like when all the, when it was that Friday, when all of the, Berkshire and,
Yep.
investments are posted. And I kind of remember seeing that Google Berkshire story, and the stock reacted, but it didn't react that much. And
It
it
didn't.
took
It
about like
didn't.
5 to 8
Yeah.
minutes before it kind of
Yeah.
like everybody saw it. And then you have retail pushing it up, 5 to 6 minutes, because they actually have to see it and read the article, as opposed to
Yeah.
some algorithm on trading desks, like driving that stock
It's a
higher.
really good point. It's a really good
So
point.
that's another, and we'll see. That doesn't mean that was like the low of the day, but it was kind of interesting. It seemed sort of obvious after, almost immediately as it was happening, and after the fact, I was like, oh, that's why we just sold off so much. And the fact that we're rallying into Nvidia earnings kind of makes a little sense. Which sort of takes me to these moves we're seeing intraday are massive. And, if you're looking at the, kind of like, I think we had a 1.5% range yesterday. We've basically been going bonkers for some time now. And we like to do this expected move, just sort of like get our grounding of like where we are and where, how do we translate the VIX, and the VIX being at 26 yesterday and 23 today. How does that translate into actual trading? Well, it translates into that the ranges get wild and get big. So we're looking at this right now, and the SPX and the SPY are pricing about a 1% move a day. And that doesn't mean that the SPX or the SPY has to move 1% a day. What it's basically saying is that you're probably going to get tested at least in those. Even if you finish unchanged, you're probably going to have at least like a 1.5% range before you do it.
Gotcha.
But if you do get a solid sentiment-driven move in one direction or the other, sometimes it'll take you, 1.5%, 2%. Like that's the kind of conditions where you could get a 2% move. And I want to
Sure.
look at like that, 1 week move. When the vol's this high, you're looking at the 1 day move, which has to hedge between, what's an unchanged day do to this move, right? Or, so you can almost look at like that 1% move as like you're anywhere between unchanged and 2%, right? And the 1 week move is fascinating because given 5 trading days, this is sort of the options market saying, if we do start to move, if all of that intraday volatility resolves in one direction, we're probably going to get a 2.5 to 3% move from here, higher or lower, right? So I think that's a good way to look at that. I will say that we've been looking at these each week. These are double what they were last week. And last week was kind of volatile, right?
Yeah.
So that 1% move a day was a 0.5% last Wednesday. The 2.5% move in the SPX was like 1.2 or 1.3%, right? So we've doubled. And what
Interesting.
that does is that sets you up for it's wild because it's going right into Nvidia earnings and what we
Right.
thought would be a jobs number tomorrow. But what it does is all of that, when the VIX goes to 26, that is the sound of 1,000 traders buying calls and puts and all right around where the SPX is trading, right? And what that does is that sort of opens up the possibilities for moves, right? Because you're slicing through all of these strikes that the market makers are short, and they're selling on the way down and they're buying on the way up, right? So everybody at Citadel right now is, as the market's ripping higher, they're like, damn it, I got to chase this. And they're buying, buying, buying. And then it reverses and they're selling, 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 right? So they're accentuating these intraday moves. So what that sets you up for is it's why you get those massive V reversals in the market on weeks like this. Or you get the big puke, right? You're down, we're almost down 5% from the highs. It's why you get that last one that's like a 3% down day and everybody thinks it's the end of the world, right? So it's the setup, it's the backdrop in the options market, which is accentuating the fears that are already in here. Now, that kind of brings me to my next slightly longer term point. If you want to go back to my SPX chart,
Mm-hmm.
when a couple of weeks ago, when we were up here, like up towards this 6,900 level, and 68.50, 68, when we were within 100 to 150 SPX points of 7,000, you and I have been talking about it's one of the only spots in the options market right now where there is a conclusive point where if the market hit that, it would affect it. It would struggle to get above 7,000. There's a ton of calls that have been sold at 7,000 going out into year end. It's a lot of banks price targets. There's big ETFs that have positionings there that are short the 7,000 call against being long the market. So when it was up at 6,900, the risk reward, we talked about this a couple of weeks ago, and this has nothing to do with fundamentals. It has nothing to do with, like opinion or anything. It was strictly math at that point, that the risk reward to the downside far outweighed the risk or the potential reward to the upside. It was basically 4 or 5 to 1 that if we declined, we were going to go down 5 to 7%, or we had the chance to go down 5 to 7% before we found some support from the options market, from technicals, from everything, versus how much of a struggle it would be for the market to get up 1, 2%, right, into year end. So we've now seen this play out exactly, what we were warning against. Now, what's interesting is, I would say the range, a rough range to keep in your head into year end, is about 7,000 on the upside in SPX, down to about 6,300, 6,350, 6,300, somewhere in that range. Let's call it 6,250 to 6,350, somewhere in that range. If we were to keep going lower, that would be, 300 points to the downside. If we were to go and reverse back higher, it's just under 400 points to the upside. So basically what we were saying a couple of weeks ago has reset. So now we're sort of in a very neutral point of the, sort of expected moves and what the options market is predicting into year end and what's in the options market. And it's funny, and it makes a ton of sense that it arrives the day before or the day of
Of
NVIDIA's
course.
report, right?
Of course.
So just looking out into year end right now, the options market is pricing about a let's call it a 5% move to the upside, which takes you basically to 7,000. And it's predicting a roughly 5% move to the downside, which takes you to 6,300. So we're at a very neutral point in that range that I was just talking about. Now, NVIDIA is obviously massively important. We talk about this every NVIDIA report, but just to kind of put it into perspective, it's about 10% of the Qs and it's about 8% of the SPY, right? NVIDIA. So it has the chance to, however investors react to this report after the close, and we might not see it immediately. It might take a couple of days. It might take a week. That is probably going to be our trend into year end. And I would say if investors are kind of like, let's take profits in NVIDIA, it's still near its highs, they didn't impress enough or whatever, and the sour mood continues, we're probably going down to 6,300 into year end, and maybe worse. If investors react positively and we start going to the upside, we will probably hit 7,000 pretty quickly. And then I think the market kind of gets, it hits a bunch of overhead supply, and then who knows what happens from there.
I think a point you made last week and a point you just made about the move maybe taking a few days in something like Nvidia, in especially Nvidia. I think it's really smart. I feel like a lot of market players kind of comment on the reactions immediately after and how important that is, and it is. I think it is. I'm not disagreeing, but I feel like not enough emphasis is put on what kind of shakes out a few days later.
Yeah. And you can see it in, we showed this graph. I updated, it's about a 6.5% expected move, which puts you, let's call it 200 to the upside, down 170 to the downside. And let me just pull up a chart so I know what I'm talking about, because this thing's
Okay.
been moving around today.
Yeah.
I think I did that roughly when NVIDIA was about here. So if you look at the prior moves, last quarter's move was less than 1%. You had a 3% move. You had an 8.5% move, which would be wild if we got that today or tomorrow.
And so CC's looking
Yeah.
at the bottom left chart here, right, CC?
Yeah. So we've
Okay.
got, that August was, it was down less than 1%. But what's wild is if you look at those charts, you can kind of see the setup into it. And this one, I would say, is probably more similar to that last February. If you
Okay.
look,
Sure.
we were selling off into it. I want to see what was so they beat 89 cents EPS and estimated was 85, 39 billion in revenue. This is insane. And it went down 8.5%, and then it kind of like followed through there. So man, if that happened, if we got that kind of move, like a more than a 6.5% move to the downside, I mean, it's kind of over for the market for a while.
For
That's
like this year, right?
totally. And
Yeah.
you would see all the other stocks come down with it, like the Microsofts and, obviously all the Oracles and all have already done it. But you would see a decline. I would say that would probably get you almost immediately down 7.5% or something from the highs in SPX. But you would probably be looking at something that would have to test a down at least a 10 to 15% move to the downside from the highs.
Yeah.
That's unlikely, I would say, especially with the move we just saw coming into this. But, I would say over the next week, how investors react. Let's say it only moves a couple of percentage points. I would probably, I don't know if I would sell the move anymore with what we've seen vol-wise. But if you go to and let's look at the NVIDIA chart and like where this expected move lines up. So this is a 3-month chart. And if you look, so here's this week's options. It's about, let's call it a 7% expected move with today's movement in the market.
Yeah.
So that's about, I would call it 170 to 200, just to kind of round up. And if you look, that's way short of, kind of these 210-ish highs that we saw end of October.
Yeah.
And then to the downside, let's go look at a 1-year chart. To the downside, that 170 level is, kind of in here with all these lows going back to like September. And, we talked about this last week. This thing has essentially been sideways since July, right?
Yeah. Yeah.
So if you think of it that way, as a range of about 170 to 200, I mean, that's pretty much the range it's been trading in since since July, really, in August. So that's kind of interesting, like that on the chart. I think this is realistic. Like if you got to move to the upside 200, it probably struggles at 200. So I would probably, if I was trading the earnings, I would be looking at, like an iron condor, and I would make sure, let's just do this real quick. I would be looking at one. All right, look at this beauty. All right, so this is an iron condor that is selling the 200 call and selling the 170 put. So basically it is positioning that NVIDIA at some point or after earnings and before Friday's expiration, that this thing is somewhere above 170 and somewhere below 200. And you're risking about 170 to make 80, but you have like a 75% chance of being correct. So that's probably how I would trade something like this. Just completely like vol's really high. The chances of this thing moving more than 7% are pretty low. I mean, it's telling you how low it is. It's about 25%. So I'd want to take the other side of that. I would feel a little nervous going directionally. If I was going directionally, I'd probably go to the upside. I'd probably be positioning with like a call spread up to like this 200 level and selling that 200 call, which is, by the way, almost $2. So whatever you're buying, if you sold that 200 call, you'd be helping pay for it with two extra dollars, basically.
Gotcha. Okay, so you gave a real clear idea there, like specifically for NVIDIA. What if I'm just regular old options trader who just likes to trade like the indices, and I have an option position on for the Qs?
Yeah.
How am I positioned? What should I be doing, knowing the importance of NVIDIA tonight and expiration on Friday?
Yeah. So this is really kind of it's like a PSA, like the more you know
Oops.
thing, like GIF, like we had
Yeah.
that.
Yeah.
So
Diddly-doo.
so basically if you have and let's use Nvidia as the example, but this goes for any sort of options position. It's a good it's a good entree to talk about exercise, assignment, things like that. So if you look at this Qs chart right now, so let's just look at like a zoom in on like a 5-day, right? So right now, the expected move, well, actually, let's use SPY and SPX because you're going to see the difference here.
Okay, sweet.
So the SPY expected move basically into the close is 0.5%. Let's see, SPX should be less. And it is, yes, it's less than 0.4%. So it's, yeah, so it's 0.35 or something. So there's like a 25% premium to SPY options expiring today than there is to SPX. The reason for that is because in SPY and Qs, SPY and Qs options continue trading to 4:15 Eastern time, right?
Hmm.
SPX options stop trading at 4 p.m. and they cash settle at 4 p.m. wherever the SPX is at exactly 4 p.m. Eastern, right? So the Qs and the SPYs keep trading for another 15 minutes. And then NVIDIA reports at, guess what time? You know it,
I know it. Chat, if you want to guess.
4:20.
Huh?
So they report 5 minutes after the SPY and the Q options
Hmm,
stop trading.
that's
But here's
interesting.
but here's the twist. SPY and Q options and IWM and any other ETF, they aren't cash settled like SPX. You can be assigned, you can be exercised, and you have the risk of what happens after hours if you didn't realize it. So,
Right.
what that means is if you have Q options, typically, if it was just a normal day and NVIDIA wasn't reporting and the VIX was 15 or something, basically you would go into 4:15 and the expected move in the Qs would basically be zero. It'd be like there'd be like a little
Huh.
bit of change on all
Sure.
of the options, but essentially everything will have gone to either 100 deltas or 0 deltas, right?
Sure. Yeah.
There's no expectation that anything big happens after hours. So a 50-cent out of the money call in the Qs might be trading a couple of cents, right? In today, knowing that 10% of the Qs are Nvidia, so that means that if Nvidia moves $20 after hours, the Qs are going to move a couple of dollars. All of those options in the Qs are going to retain premium all the way till 4:15 because of what is about to happen in the next half an hour or so of movement and potential movement. Now,
Wow.
where that matters to you is if you are long Qs and SPY calls or puts or something into the
Hmm.
close, and let's say you own the 597 Q put, right? And it's trading 598 or almost 599. You are going to be able to sell that for something. In fact, it's probably going to be, a decent amount. Like right now, if we're looking, let's do, what did I say? The 598 or 597. Yeah, it's trading 160 right now, right? And so into the close, that's still going to be trading $1 or something. And that's because of the potential for movement in Qs after hours. And the reason it retains that premium after hours is, let's say you were short the 600 Q calls, even if it was like a part of a buy right, or it was part of a call spread that you bought, like a 595 600 call spread where you short the 600 calls. The if the Qs finished right at 599 into Nvidia's print, and then the Qs were at 605 after hours because Nvidia is up to, 20 points, then you are actually probably most likely going to get assigned on that 600 call that you thought closed out of the money. And what's happening behind the scenes is the person that is long that, let's say a market maker is long that 600 call, as the Qs go up to 605, that person is selling stock at 605 and then submitting an exercise form in that 600 call. And even though it wouldn't have been automatically exercised and you wouldn't have been automatically assigned, that is happening after the close. And those market makers are scalping stock around all of these positions that they have on their sheets. And then they're going to go home at 7 p.m. Eastern completely flat and having sent in all of the exercise notices to even out their position. And what happens to you on the other side is something that you thought, some call you were short in the Qs that was $4 out of the money when the Qs closed and when the option stopped trading at 415, all of a sudden you wake up in the morning and you're short 200 shares of the Qs because you got assigned on those. And there's really nothing you can do about it. So you have all of that risk of the market opening, up another 1% through your, and you're short 200 shares of Qs.
Wow.
So what I would say is, in a day like today, and this counts for regular Friday expirations with, if anything's even close, you want to close any short strike risk that is anywhere even within reason. And you can use this like expected move as a cheat code. Like, this is a 1 day expected move right now in the Qs. It's 603.5 and 594, right? So if you had a position that was within that range, and it was a short strike, you should absolutely be closing that to take away that risk.
Yeah.
And if you are long calls, within that range, or puts within that range, you're going to be able to sell those at 410, right? For a decent amount of money, even though they look like they could be like huge losers. So that's what's going on kind of behind the scenes on a day like today. None of that applies to SPX. It's specific to the Qs and SPY, but it also is specific to, if you have Apple calls and they're, the Google example last week was a perfect example. So if you had positions going into Friday's close, and then that news came out about Berkshire, and the stock gaps up Friday after, there were a bunch of people getting assigned in Google calls and coming in short Google on Monday morning.
Whoa.
And that probably helps explain why you even got a further pop on Monday morning, is because there was a bunch of people that needed to cover short stock, right?
Oh
Because
my
who would have
gosh.
thought that Berkshire had bought Google, right?
I don't
So
think it was in many people's bingo card for
yeah,
sure.
so you have to be very careful when there's the potential of news like this. And this one is such a known event that you've got to be very careful in these options positions expiring today.
Wonderful awareness. You're at the least, nothing else, you're creating awareness for people. You're doing more though. You're giving good ideas here. So this is awesome insight, CC. Really
Nice.
appreciate this.
Yes.
Yeah.
Do we have any questions, or anybody
There
want to
was
do
a
like look at a
couple
trade or anything?
There was a couple questions. We had a question from Monica, and Brandy wanted you to take a look at AMD
Okay.
in the context of this week.
Yeah.
And I will
They've
pull
been
your
doing
chart
well
back up.
for the most part during all of this until just recently. Yeah. I mean, could that look more like Oracle stock like a couple of
I
weeks
know.
ago?
I know.
So, so let's look at Oracle's chart real quick. All right, so this is the danger. So AMD is right about here on the chart, and like look what Oracle did on the follow through. Now, market conditions could change, but I would be very, if you're long AMD or you're looking to get long AMD, which I'm just going to make an assumption because then we'll talk about the bearish, side of things. I would say you have to be at least patient until you get to, what is this? Basically 204, right? And so this gap fill, this gap would get tested, one would think, at some point, especially if we had another couple down days, or NVIDIA, obviously, if NVIDIA missed, we would go down. But man, even there's danger that it does an Oracle. And the Oracle comparison is Oracle's all the way back down here now, right? Which is just nuts. So let's just, this is I would say Oracle is like the poster child for being careful right now about chasing stocks. So this got as high as 344, and you're at 224. And that was in a month and a week. That's nuts, right? And that's the kind of stuff that has been corrected. I think we titled this show, Can NVIDIA Save the Market? I believe. Is that our title?
It was a little. I
Something like
did
that?
I did the stocks drop Val pops. The Nvidia part was a little too
It
long,
was a
but
little too long to write.
you're adding the subtext here. So
I mean, this is the exact kind of stock that NVIDIA would rescue. So this is the other thing,
sure.
is that
Yeah.
we've seen, I would argue that you've seen momentum collapse. And let's go back to AMD. But before I forget this, you saw momentum collapse. I would argue, going back to that Fed meeting, right? So I think this candle right here, I think that was the Trump China rare earth thing.
Which one?
That was like October 13th or whatever.
Okay, that would make sense. Yeah.
Yeah. And then I think whenever the Powell, remember that press conference that bummed everybody out, after the last rate cut?
Yeah.
I would say that's when momentum officially cracked. I think it started to crack with the China thing, because if you remember, that Bitcoin never recovered from this day for some reason.
Mm-hmm.
And so all of these indicators, these momentum indicators, Bitcoin, like IWM, IWM probably was a huge warning sign that momentum was cracking here. And then so basically, if NVIDIA, I saw a report today, and it was kind of funny because it came out right before the news that the jobs report, tomorrow isn't happening.
Yeah.
But I think it was JP Morgan's trading desk came out with a thing, and they said that following this, and they might be talking their book, but they think that with all of this momentum that's been unwound, basically NVIDIA will rescue the market into year end, is their sort of higher probability scenario. And it reestablishes, it's going to take everything back up with it, was their headline. So basically the point they're making is if NVIDIA, the investor reaction is positive and NVIDIA goes back to 200 and then starts going above 200 into year end, it's going to drag everything with it, including dumb stocks like Oracle, right? Is their argument. And I would say that's probably correct. I don't think it's going to get the, these the kind of meme-ish behavior we saw, although
The
Oracle's
quantum
kind of part of
names,
that.
the nuclear names,
But
the data center names, kind of deal. You're
but
saying?
yeah, I think it might, right?
Yeah.
So
Okay.
let's say if you we just keep using this stock as an example. No, I don't know nothing about it. But
It's okay. It's a good example. That's why.
But look what it's retreated to, right? So if this market's completely over and the whole rally's over, this thing's going a lot lower, and it's probably going to 25, right? But man, if NVIDIA takes the entire market higher into year end, there's no reason that this thing's not going to be back above 60 very quickly, right? And then you get into how short of a memory do traders have? Traders have a very short memory these days. So
Yeah.
I kind of agree with that take. So let's go back to AMD.
Okay.
Now, having said all of that, so if NVIDIA depresses people and everybody's like, it's over, we're selling off into year end, man, AMD is going to get killed. it's gonna go back to, it's definitely going back below 200, and you're gonna get back into this gap range, and you're
Right.
gonna at least
Probably
see, and there's probably
briefly.
some 200-day moving average or whatever that's probably
Sure.
roughly around there.
Sure. Sure.
But if Nvidia like excites everybody and everybody gets all geeked up again, yeah, this thing will keep going. It'll keep going back to those highs, 260 or whatever. So let's do the bullish scenario first. So I would look out into like year end and a call spread, and that takes you up to 250. So it's a 220, 250 call spread. Everything's super expensive here. Ooh, all right. I've got one. So the way I've sort of been positioning so I'm doing two things right now. I'm kind of short duration trading, like 0 DTE or 2 days out. Like I have some trades I did today for a bounce into Friday. Out into year end, and I'm just going to use this as an example. I have a SPY trade that it looks something like this, and the thinking behind this is you have to be very careful when the VIX is 25 of buying anything. So there's a few ways around that. One is you can sort of sell credit put spreads, like into that, like into these kind of declines. You sell credit put spreads or big inflated puts if you like to live dangerously. But the way to play for the upside, one way that I like to look is I kind of take a sort of iron butterfly, and I kind of call my shot, and I call the area that I'm trying to target. So let's say we were trying to target 700 in the SPYs. So we would take this trade and we would center, I'm going to center let's get this up there. Sorry. I'm going to center this right at like 700. And do I have it there yet? 783. Now I got to go higher. But basically what this is doing is this is basically saying volatility is really high. So I kind of want to be a net seller of vol. And you can use like an iron butterfly directionally to kind of say, all right, I'm going to make money anywhere between 670 and 725 in the stock. You can see the break evens over here to the left.
Yeah.
And then my max gain, wherever you set those short call and short put or two short calls. So you're basically doing buying one, selling two, buying one, right? And you're doing it evenly spaced out.
Whoa.
And you're selling two in the middle is your price target. And so what's going to happen if you're correct and you get a bounce in something like this is as the SPX or as SPY goes higher on a trade like this, vol starts collapsing. So and you're a net seller of options on a trade like this, and it starts your profits on a trade like this of getting your move start to come in more quickly, and you don't even have to wait for it. So you've positioned bullish, long delta, and you're short vol, if that makes sense. And we can go into more of that like on a future show where we get into like kind of how to use a 3-striked trade to avoid buying the VIX at 25, which is never smart.
Very interesting. All right, one more here. Monaco is asking for 0 DTE SPX. Why are market makers saying 30-point move for the day when it's more like an 80-point move every day this week?
Wait, what was this in? What
So,
symbol?
just for like SPX.
Yeah.
For 0 DTE SPX, why are market makers saying a 30-point move for the day when it's more like an 80-point move every day this week?
Well, right now, I mean, it's 20 into the close. Let's just look for tomorrow. So 6,700. So it's a 70. They're pricing a 70 point move for tomorrow, 70 to 80 almost. So it might just be like, maybe they were looking at like old data but that first, go back to that first card. So you can see like this is a 2-day SPX expected move. So that's above 6,700, and then below it's about 6,550 or 6,540 to the downside. But if you go to that first card,
here we go.
So it's about a 1% move right now each day. which, obviously with what's the SPX 60, so that's like a $66 move at its pricing right now. See how I did that math?
Do it again.
All right. So 1% of 6,600 is 66 bucks.
Okay.
So yeah, so it's, and I think it's sort of what we talked about at the beginning of the show. Just because you see a 1% expected move does not mean that the market's only going to move 1%. It's trying to balance out the chances that the market finishes unchanged with how much it could move if it really just starts ripping in one
Gotcha.
direction. And so
Gotcha.
you get a 1% move. And I would say in a high vol environment, that means if the SPX really got going in one direction or the other, I mean, I would put it more at like above 1.5% of where I would
Mm.
think is actually quite possible. So I would think of it that way. And it's different when it's low. So let's say it's only a 0.5% expected move and the VIX is like 16. I actually think those are overpriced. So it's weird and counterintuitive, but when vol spikes, the moves that are the potential moves are bigger, but because options have expanded so much and they're so expensive, you don't want to buy them.
Gotcha.
And when vol is really low and options premium is very low, you kind of want to be a seller. But the
Mhm.
problem is when you do get like any sort of decent move, you're kind of screwed. So options are very efficient at representing near-term fear and complacency, and on the two sides of the coin.
Felicia says that learning more about the 3 and 4-legged trades would be very helpful.
Yeah,
Just
so
throwing feedback there.
so if you think about, just to recap what we talked about today, we talked about how I would probably trade NVIDIA, which is selling the move. That's called an iron condor, and it's selling a call spread at a level I don't think NVIDIA is going to go above, and selling a put spread at a level I don't think NVIDIA is going to go below.
Hmm.
And by doing it as a spread on each side, if NVIDIA does move 10%, I just lose my money and no more, right? It's defined risk. I can only I think it was I was risking 160 to make 80 or something like that.
Want me to
Doesn't
look it
make
up?
any sense.
Want
So
me to look at it? Quickly?
it's got to add up to 250. So I was risking 180 to make 70, let's say. So that's defined risk. So the butterfly is selling the same strike. So you have a max profit and it's massive. Like if you actually nail it and call your shot and you get the move exactly to that center of a butterfly,
Hmm.
you make a ton of money for very little risk. Chances are that doesn't happen. So I like to use those more directionally. If I think, we're near a bounce and we're going to go up to 200 in NVIDIA, you could isolate a butterfly at 200 where your short strike is the 200 strike. So maybe it's a 195 call you're buying. You sell two of the 200 calls. You buy one of the 205 calls. And that's how you target a move to 200 in NVIDIA without just paying up the what for options that are very expensive into earnings.
Sure. Um, I wanted to just mention we did have the FOMC minutes from the last Fed meeting, I
Oh,
think
right.
at the end of October, that were out at 2 p.m.
Yep.
I don't know how much surprise was baked in here, but the sentiment was kind of that there was like a few who thought a few Fed members who think we should, well, we thought because it was past tense, we should cut in December, but many, quote, many saw the December rate cut as likely not appropriate.
Wow.
That being
I
said,
knew that.
I don't the Fed funds tool. Let me just make sure this is updated. Yes, so let me share my screen here. Just one sec. Sorry. The Fed funds tool like didn't really update a ton.
Is it
But
still like 49?
so after the BLS thing,
Wait,
after the
wait.
BL, yeah, after the BLS thing, the chance for no rate cut went from like 49 to like 63 or
Oh,
64.
I hadn't looked at it for this morning. It was like 48 or whatever.
Okay, thank you. Yes,
Yeah.
I was thinking it
Yeah.
was around there. I wasn't sure.
Yep.
So after the BLS thing, it updated to over 60%. Since we got that comment from those FOMC minutes from the Fed heads, it's only up 1% or 2.
Okay.
If that reassures anybody in any way.
Interesting.
Yeah.
Yeah, I would say that, well, there's two. My take on a D's rate cut is I still kind of think it's going to happen. I might be proven wrong, but this government data is clearly not helping the fact. There's two things: is if government data, and we got some data over the next 2 weeks, they go into a blackout period December 1st, the Fed, I believe, and there's no more Fed speakers and everything.
Okay, sure.
So if we get some data all before that and during the beginning of that blackout period, that for some reason causes the December rate cut odds to get back up to whatever 60% or
More.
something.
Okay, yeah.
I think that is I think that probably takes us higher into year end, overall as a market.
Okay,
If they stay low and the Fed surprises with a rate cut, that's going to be bonkers, right? Like, so if the expectations are super low for a cut and then they
sure,
actually do a cut,
sure.
I don't even know what the reaction would be. I guess it would depend on why they did it. But I guess that's part of a bigger point, which is whatever expectations are going into the cut is probably the reaction. But I think the market probably starts, I mean, a huge reason why we're down the past week is those expectations keep falling,
I
right?
think so. I think
And
so. Yeah.
if there was something that came out that sort of got those numbers back to where we were like, oh, it's looking pretty likely, I
Yeah.
think that causes a year-end rally as well.
Good little way
Yeah.
to recap the show, I think
Yeah.
there. And I am gonna share. Just want to say I'm gonna share the slides that CC was presenting over the show. I realized that I didn't share one on screen. I am gonna share it in the STN room. They're nice little reference points for the chat.
Yeah.
So I think we were good to wrap it up here. You good to wrap it up here,
Definitely.
CC, for this week?
Yes.
Okay, awesome, awesome. Well, CC options Unchained. Thanks for joining us. Thanks for hosting us here, CC, today.
Thank you.
All
That
right,
was
cool.
good. See
We'll
you
see
later.
you on Friday.
Yes.